Welcome, everybody. So I'm going to briefly have an introduction with Kristin first, and then kind of work our way down. And we have a good mix of folks that are operators, as well as folks that have invested in a lot of different classes of infrastructure. And then we'll probably open it up to Q&A at the end if there's any time. But welcome, Kristin, GIC. Maybe give us a little bit of an introduction as to kind of the asset classes that GIC has been involved in, and kind of what your broader mandate is.
Sure. So specifically within GIC, I'm a part of the real estate group, but our mandate is much broader than that, including equities and bonds in one division, and then in private investments we do private equity and infrastructure and real estate. And so drilling into real estate, which is where the majority of our data center investments have been, we invest in the traditional real estate sectors: office, industrial, multifamily, and retail. And over the past 5 years or so, we more broadly have shifted into what we call more niche sectors, which data centers is a part of that, but also manufactured housing, student housing, senior housing, lots of housing, single family rent housing. We like things with beds for sure. And also lab science as well. And then further within that, we can invest across the capital structure. So we can, within real estate, in all those asset classes, do public or private equity, as well as public and private debt. So we really have a very broad, diversified portfolio.
Give us a little bit of a flavor for examples of data center investments that you've made so far, either in terms of joint ventures or outright ownership.
Sure, absolutely. So globally, data centers are in one of our key investment focuses, and we have investments in the US in a development platform called EdgeCore. We recently formed a joint venture in EMEA with Equinix to develop hyperscale data centers there. And throughout Asia, we have a couple of different platforms. Some are joint ventures with public companies. One is in China. We have a joint venture with Lend-Lease. That's a pan-Asian venture. And then we have smaller investments in Japan and Indonesia as well.
So is there any kind of broader preference that you have in terms of region, type of business model, metro, major metro, emerging markets, and any kind of common theme there, or do you sort of take it, individual case basis in terms of the opportunities that you're looking at?
It's individual case basis. Absolutely, we look at lots and lots of opportunities. I think we've had a hard time making acquisitions pencil, so we haven't done any acquisitions really, maybe except for maybe a handful that were more fully leased, kind of to be delivered developments. As real estate investors, we try to buy below replacement cost, and we have found that challenging in this sector. In terms of geographies, we're open to geography. I think in the US, we've seen a lot of capital and a lot of supply, so we're a little bit less excited about that area over the next 12 to 24 months, and a little bit more excited about Europe and Asia, but we're happy to do emerging markets or developed markets. I guess the other thing I would say is we're a little bit hesitant to deploy capital, or I shouldn't say a little, I should say a lot hesitant to deploy capital into retail co-location that we think is really just a bunch of small deployments that will ultimately potentially be moved to the cloud if they haven't already. So kind of the residual value of that asset as real estate investors makes us a little bit nervous, and we haven't really figured out how to underwrite that risk.
Interesting. So Waldemar, welcome. KKR, you've been on board for, I guess, over a year. You lead the global, communications infrastructure investing team. Give us a couple of, a flavor for the types of opportunities that your team examines across the broader landscape.
Sure. I mean, we have a pretty wide mandate in terms of KKR, obviously across the stage of investment, so from growth, private equity to infrastructure, and even core sort of a private equity, and across different sectors. Within telecom specifically and digital infrastructure, I think we've been very focused on the space. I think initially focusing predominantly on tower and subsea cable investments, mostly within Europe and Latin America. Over the past 12 months since I sort of joined KKR, we've been dedicating a lot of time and resources to data center. Again, thinking about the whole spectrum of colo, wholesale, hyperscale, and edge. Again, because we can sort of based on the opportunity, put it into the right pool of capital for us, and in the sort of the middle and last mile fiber connectivity platforms. Last investment we actually made was, and we're really excited about, is a platform in the UK, a business called Hyperoptic, which is a residential gigabit provider in that market. So I think, over the next months, we're cautious as well as sort of Kristin said, on certain sectors and pricing of assets, but I think we're pretty focused on those two themes as well as the other sort of pillars of the sectors.
And then in general terms, how do you think about risk-adjusted returns for these various types of business models?
I think time will tell ultimately, because I think the four of us will have a different point of view on those returns. I think we have perhaps a slightly more purist view of infrastructure, meaning physical assets, irreplaceable assets underpinned by long-term contracts, predictable revenue streams. That definition has really been evolving by some of our competitors. And within the infrastructure sector, where we look to deploy hundreds to billions of dollars, it's likely in the sort of a 13 to 15% return range. PE, you add 500 basis points of premium to that, and then if you go into growth, it's well north of that. So those are rough gauges, but it's very opportunity specific. Got it.
Bruno, welcome.
Thank you. Good morning.
So broad set of activities as the global CEO. Maybe give us an introduction to STT GDC.
Sure. Thank you, John. STT Global Data Centers has been around effectively for 5.5 years, but from 0 data centers today, we speak to more than 100 across some key markets, China being one of them through our GDS, which is listed on the NASDAQ, STT GDC India, which is a joint venture we control with Tata Communications, and Virtus in UK, which is a premier data center player that's taken significant market share in the last 4 years in that space. Singapore, we have STT GDC Singapore, which again has grown quite well in the last 5.5 years. And we also have a new facility that we are building out in Thailand. The commitment in the last 5.5 years is to really get to where we are now, which is more than 100 data centers across these geographies. Effectively, 1/3 of that is been bought through various M&A acquisitions, but 2/3 have been built in the course of the last 5.5 years. It speaks to the excitement and the opportunity that's really in this sector in APAC as well as in UK. We take a different approach at STT GDC. We really focus as an investor as well as an operator. So the team is in a position not just to invest and put serious capital to work in these markets. It actually is operating these assets in each of these geographies. So that's a unique differentiator that makes us attractive to our customers, partners, etc.
Given the breadth of your activities, maybe give us a flavor for the demand drivers that you see across region. I suppose China is kind of off on the side, but across these major markets, what are the commonalities? What are some of the differences in terms of how you see demand developing?
I think scale is becoming very important across all these geographies. The growth is quite frenetic. If we can build it, we will fill it. But the challenge is more and more we are having the need to have capacity, continuous capacity for our customers. Having campus-style solutions for our customers is very important. If they don't see a pathway to multiple megawatts in a particular locality, you are unlikely to even get the first order from them. So that's important, scale. The other thing that's becoming pretty significant is as we are in Asia Pac, the challenges of doing business in Asia Pac is still real. Securing land, securing power, carbon quotas are becoming quite important. All that is going to factor, it is factoring in the ability to meet the demand that our customers are expecting. So that continues to be front and center. So these are some of the, in high level, some of the big things that are going to impact the growth of the business going forward.
So you touched on carbon quotas. Are there any other notable factors as you think about resource procurement and just operating across these different geographies?
Yeah, the ease of use in these countries. I mean, there's some data saying that China is 31 in the criteria of countries in terms of ease of business. India is 41. Singapore is number 5. So that's the challenges that you see in Asia Pac. You have developed countries, easy to do business, but have now strong carbon quotas like Singapore. They have paused all build for the next 2 years until they decide how the climate situation is impacting with all the data centers that are mushrooming. So the regulatory issues, the land issues in each of these geographies are different and varied, and that's the demand is great in these countries, but then you can't deliver as quickly because of all these rules. So it is the ability to engage at the local levels is going to be critical to succeed in these markets. India has its challenges. There is probably 35 or 40 approvals that you need to get, and not all of them can be done simultaneously. Most of it is sequential. You can't get one before you get the other. So it is very challenging, but it requires a lot of hands-on local capability to deliver that.
So Steve, no stranger to this forum, maybe bring us up to speed on your role at GI. You've got some board seats as well.
Sure, John, good to see you. Thanks for having me. GI, as most people probably in the room know, has been in the investing business for 20 plus years now. Started in the infrastructure space, actually founded Digital Realty, was involved with companies like SoftLayer and Telex. So lots of companies that have been in and around the infrastructure space have passed through the GI channels. I was hired about 18 months ago to help build a team with them to focus on raising an infrastructure fund that was going to be focused on, as Waldemar described and Bruno described, hard asset businesses in the data center, data transport, wireless, and a fourth category that we call tech-enabled, which is any IoT-related businesses that are evolving now. So the firm has been in the private equity business in North America only for a couple decades, as I mentioned, and that part of the firm has evolved into investing in software, healthcare, services business. They also have a real estate arm that owns properties all over North America, owns some of the most prominent properties in North America. They own probably 27 data centers, plus the Flexential business, which is a 41 data center, 20 market company. So all in all, GI owns 65, 66 data centers, fiber businesses, et cetera. So it crosses most of the infrastructure categories. And we've built a team now to help them with a third strategy beyond the private equity investing and the real estate investing, an infrastructure-focused investment team, again, focused on the same hard assets that Waldemar talked about that KKR is looking at.
So given your involvement with Flexential, you've got exposure to Tier 2, Tier 1 cities in North America. How do you see the market evolving between those?
Yeah, I think it's a great question, John, and I think we've all lived through this past 12, 13 years of the cloud unfolding in the big Tier 1 markets around the world. Some Tier 2 businesses have been exposed through access nodes. I think the thesis in the industry today that a lot of us are looking at is that the concept of that compute, storage, and networking moving further out to Tier 2, Tier 3 markets, the concept of the edge, concept of more things being deployed in all these markets. And I think we're at the front edge of more secondary, tertiary markets being populated with compute, storage, and networking. And so companies like Flexential, that's predominantly in Tier 2 and Tier 3 markets by GDP, by size of companies, et cetera, I think are very well positioned to capture the demand as it pushes further out. I think the people that have been in this industry for a long time know that we've moved from back in the 50s through the 70s, a mainframe centralized compute model to client server in the 80s and 90s to cloud in the 2000s. And I don't think it's any surprise to anybody in this room that we're headed towards more distributed compute, storage, and networking moving to the edge. I don't think it's going to replace centralized cloud, but I think it's going to supplement it. And I think there's going to be a lot of opportunity for fiber companies, wireless businesses ahead of 5G, and more data center, as Bruno has talked about.
So you bring an interesting perspective as well, given FlexCentral's involvement in hosting. There's a number of other kind of middle market operators such as TierPoint and Cologix and others. And how do you see the future of the hosting sector evolving given the high profile growth that we've seen from major public cloud platforms such as Amazon and Microsoft? What's the future of traditional managed hosting?
Yeah, really quickly, John, I tell you, it's been interesting to be in this part of the business after being in a big public company. We're now hunting in tier 2, tier 3 markets, so I'm going to places that I never used to go to. And it's amazing to see these small to medium-sized technology companies, whether it's a fiber business or a wireless related business or a data center business, servicing those local communities that have hospitals, schools, medium-sized businesses that need broadband, they need data center capacity, they need all the things that these companies are providing. And I think it's going to continue at a rapid pace. And I think there's going to be a lot more investment being pushed out to these smaller communities. And you know, today if you go to the middle of North America and you go see how business is done in a small town, you know, food, water, shelter, broadband. And guess what? Broadband to younger people is just as important as any of those first three things. And so there's a lot of investment that's going into these communities all over the world. We're focused only in North America, so we're fine-tuned there. But I think this is going to bring a lot of opportunity for people in this room and for the businesses that we all are affiliated with on stage here.
So I want to kind of take a step back and recognizing that this is the first PTC of this decade. A number of you have been involved in the sector dating back a decade or more. What are some of the broader technology trends you see evolving over the next decade, and how might that drive new business models and change the investment landscape? And I'll start with Steve, and then maybe Waldemar, Bruno, if you want to chime in.
Let me be really quick because these guys know a lot more. But I think AI is going to be interesting to watch. I think it's going to change the workforce as we know it today. It's, AI can do human and physical things. I think it's superhuman when it comes to data and numbers. It's involved in every tech company, every device that we have in our homes and in business. So I think it's a tough movement because it's targeting the workforce. I think there's a big debate going on in the world about how much artificial intelligence will or will not replace human labor. So I think that's going to unfold over the coming years, but it's involved in pretty much every company that we're going to be dealing with. I do think there's another wave of cloud coming. It's been so densely populated in the big markets. I think, as we just talked about, it's going to push further out. I think we're facing another decade of continued cloud deployment. 50–60% of the world's IT is cloud enabled today. I think that's probably going to go to 70–80%. I think the concept of these things that we have in our homes and businesses, and there's some 25–30 billion of these today, on its way to 50 billion devices supposedly by 2025. I think they're going to create enormous opportunities for people, and it's going to change the way we live. I think 5G will enable the concept of IoT to really unfold at a high rate. I think as 4G enabled smartphones, I think 5G will enable the concept of IoT to a level that we've never perceived. I guess the last thing I'd say, if you just think back 12 years ago, we were on our first versions of iPhones. Some people were still using other devices. We were still going to Blockbuster to get movies. We were still going to Borders to get music. We were taking taxis to the airport. Just think about what's happened in the last 12, 13 years. Who would have envisioned any of that? So what I find exciting about remaining in this industry is I think if you project the next 10 years and look at a handful of those things, I think we're going to be living in a completely different world that no one even sees today. I think it's going to be very exciting for all of us.
It's hard to add to that, but we have a lot of discussions about this internally, and recently we were talking about sort of the hype of today versus the reality of tomorrow, and we were looking at dating ourselves going back to 1990, the buzzwords of e-commerce, SEO, and others, and think about it where we are today in that context. And then if you look at what today we talk about, Steve mentioned 5G. AI, sort of big data, et cetera. I think there are a lot of things to be excited about. That path, though, is not always clear, right? And there'll be a lot of misses along the way by people who may have maybe misjudged the timing of it. But I think that sort of from a secular perspective, there are a lot of things to really be excited. I think thematically, I would say the evolution of 5G and how we think about the business models and the business cases around it. I think it's something that we're really keeping an eye on. And frankly, across our portfolio, even across different sectors, we're constantly thinking about technology and how technology is becoming an integral part of investment thesis. And certainly sort of mobile edge computing and that kind of ongoing evolution. We're spending a lot of time thinking about sort of a consumption and distribution of content and how that is changing, and clearly the impact on sort of the various pipes that we all talk about here. So variety of things to be excited about, but we're also a little bit wary that sometimes the hype may be a little bit ahead of the reality.
So all that's going to need, it's going to need fiber, it's going to need mobile infrastructure, it's going to need compute infrastructure, data centers, if you will. Do you see the competition for capital different across those three, or is there an area that you want to be sort of equally distributed? How do you kind of see?
Yeah, it's. I mean, I don't. It sort of ends up being very opportunity specific. I do think that there will be a different distribution of value across that ecosystem, and I think finding, this is maybe that high water ends up helping everyone, but I think finding appropriately where value will be distributed and shifted and what will be disrupted is the key element that we're wrestling with. I'm not sure that the small cell business model as it sort of exists today will exist in the future. Will there be a value transfer between last mile and middle mile as the architecture of storage and compute changes? Likely. So I think we're thinking through that. There's a lot of capital looking at the sector because clearly digital infrastructure has become sort of the newer sector within infrastructure. I think we're wrestling with a lot of pricing. There isn't an equivalence of asset quality, management team quality across these assets, but there is kind of a common underpinning of similar values that these things end up trading at. So, again, time only tells who picked the right winners and losers.
Anything to add, Bruno?
Yeah, I mean, I'll echo a lot of what Steve and Waldemar said about the sector, but I will say that there'll be a challenge for us who are in the infrastructure space. We have to build more efficient, more sustainable solutions across the board. The environment demands it, governments will demand it, and the whole ethos of our sector and will be judged in the next few years by how quickly we can be more efficient in the way we deploy the infrastructure to address some of these climate issues, because we are becoming a bit of a lightning rod for criticism in the marketplace, that in fulfilling a lot of these demands, which are really understandable and it's insatiable, we must be challenging ourselves as an industry to deliver more efficient, sustainable solutions. And I think more money is going into those parts of the ESG sector as well. So building data centers the same way is not an option anymore. We have to be more efficient and thinking about new state-of-the-art solutions to provide efficiencies that are market edge and leading, even in geographies like India, China, etc. A lot of the governments are insisting on it. Shanghai has a huge carbon quota regime that doesn't allow you to build if you don't have that quota. And using renewables, etc., is going to be the way forward. So I think all this is going to make the industry exciting, challenging to meet some of the even more growing demands that our customers are expecting.
So I'm going to give Kristin the last word, and maybe touching on this sort of ESG theme, so environmental and socially responsible investing, and how that kind of pertains to real estate. And as someone who's been involved in the sector for a number of years, but not dating back, say, a decade, how has your assessment of infrastructure investing changed during the time that you've been involved?
Sure, yeah. So, I mean, we've only been looking at the data center sector for the past 3 to 4 years, I would say, and ESG has become a really important component of that, whereas and that's not just for the data center sector, it's for the entire real estate sector. As we look across our office buildings, our retail malls, everything is kind of focused on, is it LEED certified, is it doing things to reduce the carbon footprint? So it's something that we're aware of, but I would say it's it's a new awareness that will be in growing importance to us. And as we think about when we thought about the sector maybe 3 or so years ago, I think demand wasn't as concentrated as it is today from kind of a wholesale hyperscale tenant standpoint. So I think over the past 3 years, we've really seen constant dynamic shifts in the data center sector from a real estate investor standpoint and probably beyond. And I think how it's changed the way we think about it is we really need to find good operators to partner with. And I think we have found those in our platforms, but going forward, it's very important for us to scale our business. We have a significant amount of capital that we're looking to invest. So if we can find good operators that can help us scale the business, that's a key area of focus to us. The issue is there's a lot of other people with capital also looking to invest, so the competition for that is significant.
Thank you very much, panelists, for your time, and that'll conclude.
Thank you.
Thank you.